Guys, you're going to be absolutely freaking mind blown by this. Check us out. Check us out. You know me, all right? Listen. I'm wearing pants. Look at this. I'm wearing pants. I can't believe that. I can't even remember. I can't remember the last time that I put on a pair of pants. Guys, today we're going to give you an update on ticker symbol AMC. We're going to talk about everything that's sort of taking place right now regarding the chart, regarding where things are sitting. We're going to talk about APE. We're going to talk about the implied volatility of the stock. We're going to give you an update on everything sort of rocking and give you some if this, then that scenarios. And we talked about this yesterday in my video titled, We Are Still Going Up. I gave a couple different scenarios, and one of them was today we get a chop day on relatively low volume. I want to digest how that sort of took place and what we're looking like sort of moving forward. We're going to talk about the APE situation a little bit. We have a little bit of red here. SPY, where this is sitting right now, and then finish off by talking about the $1,000 account that I'm starting for September that's going to be traded live on live stream. So without further ado, I suppose, let's get right into it, eh? Right now, this is where we're sitting. Today, during the stream, I hopped on a little bit late. I started at roughly 12:15 p.m. Eastern. I had some errands I was running this morning. And when I hopped down on the stream, we were down. We were down a little bit on the day for Amy. Amy was down roughly to 870, 880. And I remember reading on Twitter from a couple different people saying, I cut my calls. You know, I think we're coming down to 780. I think, we're looking pretty bearish. And to me, when I saw that we were down at 870, I said, all right, but we haven't counted our chickens yet, right? We're a little preemptive. We had to wait until these guys lay some eggs and see what kind of happens. So I came up with sort of these three things that I think are if this, then that scenarios moving into the rest of the week and what things look like heading into September. And it was this. Number one, which is a bearish scenario, close below $9. The short-term bias would be towards 780. Which is right here. My reasoning for this is that it's a pretty decent sized shelf on the volume profile, VPVR. If you look at this right here, you can see, yep, look at this. We got tons and tons and tons of liquidity right here and a pretty nice sized pocket between there and that. 830 to also have, 820, 830, another little decent sized shelf that you could catch a stop on in this scenario. But if we get a daily candle that closes below 9, this is a very realistic short-term possibility. It would invalidate the bull thesis that a lot of people have been talking about heading into September, and we did not invalidate that today. So I want to talk about option two, another little scenario that we had planned out, which was this. It closed above $9, and this is really what I expected for the day. We just kind of got a little bit of a juke there, a little bit of a scare regarding what things are going to do, but it was closed above $9, and your short-term bias is still towards 1110. And my reasoning for this is the rising support accumulation trend line. We've talked about this many times. It shouldn't come as new news to you. This is really more of just a check-in on things in case you want to know where AMC is sitting right now. We're still validating the bull thesis for a bounce off rising support trend. Just barely, but we are. We closed the day at $9.12, which was technically red by 1.62%. However, the daily candle closed green on increasing volume. This is just barely a doji candle. If you were to look at this right now, some people were saying this is a dumpster baby, a bullish abandoned baby, which looks like this. I would say that it's not bullish abandoned baby. We don't really have that setup because we didn't get the gap down, right? You'd expect a setup like this where you have a strong red candle, gap down, green doji, gap up, strong green candle. This isn't what that looks like to me, but it is a bottoming tail setup. You could maybe make a claim about a morning star, but I wouldn't quite call it that. I wouldn't quite call this a morning star doji setup. A little bit different. You're looking for a stronger sort of red candle in this scenario, and you're looking for a downtrend. And to me, AMC right now is not in a downtrend. It's in a range, right? You're in range trading. This is sort of it's trying to decide, hey, do we want to discover some liquidity down here in between that sort of $8, $7 range? Or do we want to discover some liquidity up here towards that $9 to $11 range? Technicality speaking, you do have more liquidity down here, right? Which just tells us that, hey, net, we've seen more trading in that range for AMC than we have in that higher range, which is that pocket between $10 and roughly $11.10 or so. So you'd be inclined to believe that there's a slight bias to the upside. However, bias doesn't matter. Feelings don't matter. Emotions may bear some significance to you, but on the chart, it does not, right? So as long as we meet these conditions, which are close above $9, we have a short-term bias towards 11.10. That's where I'm sitting right now. Until we have a daily candle that closes below 9, right, I'm still leaning towards 2. And that's just where we're at. However, if we close beneath $9 and we invalidate this rising support trend line on a daily time frame, then I am of the utmost belief that AMC in the short term has a bias to come down and gravitate towards that $7.80 volume sort of pocket there, right? That shelf. Beneath that, you'd have another one at roughly like 617. This is another spot where you could get a catch, and this is also the low off of this broadening falling wedge on AMC. I find it incredibly unlikely that you come all the way back down here. That's just a world that I don't see. I don't see that taking place. It doesn't make sense to me. You've got RSI cooked all the way down to freaking 38, and if you were to actually bar for bar sort of look at how this is compared to the daily candles, you do have a bit of a divergence starting to take place here. If you were to come back a ways, right, you've got this RSI cooking as such. Low down at about 19, low at about 27, low at about 37. This is a spot where the chart's got to make a decision, all right? Does RSI want to break this trend and crank it down, or does it want to bounce, right? Does RSI want to bounce, which is what we'd expect if you get a nice crank to the upside. You got a trend in both areas. I misspoke earlier when I said divergence. Let me make that clear. No divergence on the RSI. However, you just got double confirmation of trend here. Whatever direction we get a move, you expect it to be a decent sized one. To the downside, you'd have roughly a looks like 14% move if we came all the way down to 790. To the upside, if we're coming up to that 1130 mark, you'd be looking at roughly a 22% move. So to me, there's more upside than downside. I think this pocket would be slightly easier to work your way through to get up to this $11 and some change range. But right now, we're still just hanging. We're in this chop zone. And it's no wonder if you look at this, right? This is where you have the most volume density. This is also the point of control. This is where we're range trading, right? This is a spot that's going to be tough to crack. And we have a lot of established range. So to break above or below that is going to come with a big move. So if you crack underneath, right, $9 make you holler, right? You crack underneath that, you're going to get a pretty quick move if volume steps in to roughly 830, and from there, I think 780 in that bear case scenario. In the bull case, we already spoke on this, which is where I'm leaning towards right now, based on the conditions of holding the rising support trend, which was today, roughly $9, what we needed to make that happen. I'm going to show you just so you can see my thought process behind this, right? If I come back to the daily and we show you that accumulation rising trend line, that tap is at like $9.904. So we got it, right? We closed at 912. We're still holding that uptrend. And we had higher overall volume as well on a daily green candle. This is a trend to pay attention to, right? Look at this. Drop in volume on red, rise in volume on green. These are good things to see. That decrease in volume and an increase when buyers are stepping in shows you that buyers right now are contending for that push upwards. But at the end of the day, it's not going to matter if we break that rising support trend. You are going to come down to about 780. We're going to come down to 780, and that's something we would watch for. Till then, I'm still staying intact with that. I'm saying we're going up. We called out for a chop day today, a slow day today. We got a slow day today. The only thing I maybe didn't anticipate was a higher volume than yesterday. But that could be indicative of this, the bottom on implied volatility. And I showed you this in yesterday's video, and I think this is significant. If I show you this, every time that we've had the local low in terms of volume, that is typically a signal of an upcoming rip. Now, if this is a local low on volume, and I'm not sure if it is or not, right? Back here, we had a local low on volume on a slightly green day. We were green that day by, or actually we were red. We were red by 0.14% on a total volume on the day of 18.22 million. That was a signal of an upcoming move. So if that's the local low in volume, tomorrow we have another increase in volume. Price continues to jostle around, come back up to that point of control at about $9.50, right? That tells me the direction we're going. So heading into tomorrow, what I'd like to see, bull case scenario, crank back up to that 950 range, increased volume, green volume, right? Green day. That just furthers the bias towards close above 9, brings you to 1110. We don't have a lot of wiggle room. Things are very tight. And when they're tight like this, you got to give yourself a little more wiggle room. So I'd like to see Amy back up to 950 on increasing volume, bull case scenario. Bear case scenario heading into tomorrow as we break this. Right now it's $9 in the after hours, are down 1.32%. If you crack this and at the open tomorrow, we're at, let's just say like 880, you've got your bias downwards to about this range that we should be paying attention to. So that's where we're at on Amy. IV cooled off, right? We talked about this yesterday, 131% IV. Historically speaking, there is still some more downside on this. I can show you guys in a whiteboard here. I actually put this down. The marked sort of pattern that we have witnessed within implied volatility historically from AMC is right here, right? I'm just going to pull this aside so we can see this a little bit cleaner. That's nice. Well, you're just going to have to look at these letters, but nonetheless, rising support trend, right? That's that red trend line. Every time it taps here, typically price increases, and rising resistance trend. Every time it taps here, it typically likes to go back down. So in the bear case scenario, I think if they come and bring AMC all the way back down to like $7.87, the bias towards that and the reasoning for that, to me, would be to bring that IV and make it just a little bit cheaper. You know, I'll draw this up and show you what would probably happen. It'd probably be a sort of a Band-Aid rip move down. So you maybe get this sort of chop up on IV and then just a slow move all the way back down to the trend line until it can bounce back up, give you some more upside for the options chain. And whenever this happens, usually stock price goes up. This is an observation. Doesn't mean it's going to happen again, but trend is pretty friendly, right? Trend is your friend. And there's a nice trend that we can pay attention to. Ape is at $4.90 right now, down 5.77% on the day. We come to this on the daily time frame. It's an ugly chart. It's a little bit of a chart. I always like to call shit charts, and this is an ugly chart. There's no beating around the bush on that. However, you do have a local bottom at roughly 473. I like to pay attention to volume. I think volume is indicative of things. You did get a slight decrease in volume today in comparison to yesterday, 16.5 versus 17. This to me shows that sellers are starting to back off a little bit, and I'd expect a little bit of this. Chopping back and forth until eventually making a push back up on an overall net increase in volume. This is your bull case scenario for Ape. Your bear case scenario would be something along these lines. Let me just get rid of all these drawings that I just marked. I think a bear case is you're going to continue to see volume drop off as it slowly curls its way down. As such, slows down, volatility slows down, and then makes its way back to the upside. To this day, point of control, which is where I think a breakout level is imminent, is about $7.30. Amy's is right here at 9.5. If Amy cracks above 9.5 with some solid volume, it moves up. Same thing can be said about Ape. 7.30, volume steps in, moving up. That's what we're looking at. So that's Ape right now. SPY was in a falling wedge today. And I'm just going to hide this really quick just so you can see falling level of resistance, falling level of support. You can draw this up on the chart really nice. You see this cut back in volume, broke this, and then entered another intraday falling wedge that appears to actually have been broken out of today. I am actually of the opinion that we're going to have a little bit of a crank up tomorrow. I got to ask in chat today, though, where do you see the SPY dropping to maximum? And I'd like to kind of go over this because I do have a little bit of logic behind my thought process here from a technical perspective. Looking at the SPY right now, what I see is making the most sense narrative-wise is a pop down to roughly 376 as the local bottom, worst case scenario, and best for a bear scenario is right here at that 382 level. I think you can catch here because you have a pretty established trading range. Right? There's been a lot of liquidity that's exchanged hands here. This is going to act as sort of a slowdown zone, a chop zone where you can expect some of this goofy-ass price action, this this chop suey nonsense, right? Very possible that we start to see that here if this is the local bottom on the SPY. And what it would do is form up a nice inverse head and shoulders. I just don't see a world. I'm standing by this. I don't see a world where we come all the way down to the bottom of this falling, broadening wedge. I just don't think this is going to happen. That's a very, very long drop. And I think you need a pretty wild news catalyst to cause that. In a world where, let's just say the SPY, not the SPY, but the Fed comes out and gets really aggressive. They say, hey, we're going to raise rates by 100 basis points for this next rate hike, and we plan on raising it by 75 to 100 for the next 6 months. In that world, man, yes, the SPY is gonna feel some pain because that would show that maybe the Fed is going to get serious about quantitative tightening, which they have not been to this point. But until then, man, I'm sharing my same perspective. I think that a lot of retail is too bearish. I think because of this, they're gonna trap some people, and this looks like a narrative in which they can make that happen. Left shoulder, head, right shoulder, and if things change, we pay attention to levels. At the end of the day, it doesn't matter what I think. It doesn't matter what my bias is. What matters is making money, right? So we read the chart every single day, intraday. We look at the levels. We say, hey, based on this, then that. Based on this, then that, and we make do with what we got. So that's where the SPY is sitting right now. And lastly is this, my $1,000 account. My $1,000 account is going to start tomorrow. I took 2 trades on the SPY today. I started the account with $1,000, ended up having profit of roughly $129, and that is what we're going to be starting out the account with tomorrow. It's not a challenge account. I have no dates attached. I have no price target attached. It's just going to be something that I'm taking trades in actively whenever I am on a live stream and I see a setup that I like, and I'm very specifically using $1,000 because I think it is an amount of money that people can kind of scrounge up, right? It is a significant amount. Don't get me wrong. $1,000 is a lot of cash, but a lot of people, I think, sit on the sidelines with $1,000 and say, I don't really want to start because I don't think it's enough, right? I want to get past pattern day trading. I can't day trade. I don't want to get stuck. And I want to show people that you can. And that's the ultimate goal. Full disclosure. I've failed miserably with a $100,000 account challenge in the past. I have. I absolutely freaking blew it. And I want to show you guys improvement and what it looks like to be able to say, hey, I have failed in the past, but that's okay because I'm going to keep trying. And we're going to do that. So no challenge, no dates, no price targets. It's just going to be me trading, trying to make some money. In a cash account, in case you're curious, you can't avoid PDT, pattern day trading, by using a cash account, which is what I'm going to be doing. We're going to have some fun. We're going to make some money when there's opportunities, and when there's not, we just sit on the sidelines and we enjoy our day. So that's what I've got. I suppose that's about it. Appreciate you guys, and then we'll be back tomorrow, 9 a.m. Eastern on YouTube. If you want to stop by, it'd be great to have you. Otherwise, twitch.tv/anti-juicer. Tonight, I will be live. We'll go over some charts for a few hours, and we'll go on with our day. Till then, appreciate you guys as always. Much love, like taps. Oh, shit.